You look around the world at certain parts in the Delta variant, China, where Eunice just is, parts of Malaysia, Indonesia, Australia, primarily in Asia and Latin America right now. Some concerns here as well. But when you dig into the numbers, do you have real concerns about the U.S. economy and the U.S. markets?
Not really, Brian. Not over. I don't see lockdowns coming back. First of all, the public's just not going to put up with it. Again, I just think that people have been cooped up long enough. You've talked a lot about millennials, gaining a tremendous amount of weight. I think there's a lot of issues out there with mental health issues on this, and you have to weigh the risks. I think the current vaccination program obviously has been enormously effective. It's the reason why we're leading the global recovery right now. And I think the variants will come up periodically, but I think they're going to be more regional in nature and should be able to be contained if anything, big actually happens. My sense is that this is going to be more of a regional issue versus anything else.
Yeah, Morgan Stanley had a list of hotspots, Branson, Missouri, a few other parts where they have these localized hits. Let's hope that's the case, because to your point here, from a national perspective, maybe not a lot of appetite. All right, let's get now to an appetite for profit, making some money, because the one thing we love about having you on, Dan, is you always come with some ideas. They are unique. There's a company called Centene. We've all probably heard of the name. I know it's a Medicaid HMO. What specifically about Centene is so attractive to you? Well,
Centene has been around, came public in 2001 at a split adjusted price of around $1.15 a share. I was fortunate to have met Michael Neidorff, the company's CEO back then. We've been a shareholder in various Palisade strategies over the entire period of time. But I like the HMO space, particularly since we're more mid-cycle right now. Centene is an elite compounder of return. When I was on with you last, we talked about Danaher. I put Centene right in the same category. Some of the characteristics that we like about it, and again, our compounders strategy, which we call focused equity, was started by my colleague, Will Potter. He and I worked together on the strategy. Centene's got over 100% free cash flow to net income, very high cash flow return on invested capital, and really a culture. It's just a winning culture. I mean, Michael's done an extraordinary job over many decades, putting together an incredibly deep team of people. Here's the key thing with Centene, though. They're going to close the acquisition of Magellan Health, a company in the behavioral health space. I really have concerns that many of our friends are really struggling with ongoing mental health issues around depression. I mean, we've all been through a lot. Some people handle it better than others. And unfortunately, I think that's going to be a tailwind for Centene going forward. But as the largest Medicaid HMO, they're incredibly well positioned going forward, as they also are a dominant player in the exchanges and also in Medicare as well, which is very much a growing part of their business.
Okay, watch CNC very quickly. We had a CNBC Pro event the other day with David Giroux at T. Rowe Price. He was loving a company called Danaher, DHR. That is also a name you like as well. Again, kind of an under the radar. I don't want to call them a mini GE because that might be insulting to them, but it's a company that you've owned for a long time.
I have. It's at a larger market cap than GE right now, and they're it's perhaps the best example of a company that's just had an extraordinary multi-decade record of allocating capital and delivering for shareholders. It's an incredible company, and we still think there's a lot of runway ahead for Danaher.
Shepard Smith here. Thanks for watching CNBC on YouTube.